Hello everyone, I'm Nur Asfa Kistina binti Muhammad Nazri and I'm from GBA 1144J. Today I would like to discuss the article regarding Bursa Malaysia relaxes margin financing rules to ease forced selling pressure on market. What is margin trading? In margin financing, you will be buying shares using borrowed money. You must have a margin account to buy on margin. A margin account is a standard brokerage account in which an investor is allowed to use the current cash or securities in their account as collateral for a loan. Margin transaction. Client may place collateral when purchasing securities when providing that some of the collateral and securities purchased is not less than 150% of outstanding balance. Next, let's discuss about advantage and disadvantage of margin trading. There's two advantages of margin trading, which is magnify return and allow for greater diversification of security holdings. And there's also two disadvantages of margin trading, which is the cost of the margin loans and magnify losses. Magnify return is defined by the lower the amount of the investor equity in the investment, the greater the rate of return the investor will enjoy when the price of the stock rises. While allow for greater diversification of security holdings basically means that investors can spread their limited capital over a larger number of investments. The cost of the margin loans is the cost made is a stated interest rate which depends on the prevailing market rates and the amount of money being borrowed, and magnify losses happen when investors have the potential to magnify losses if the security price falls. There are two types of margin requirement, which is initial margin and maintenance margin. Initial margin is the minimum amount of equity that must be provided by a margin investor at the time of purchase. It is to prevent overtrading and excessive speculation. Maintenance margin is the percentage of the minimum amount of the margin to the market value that has to be maintained at all times by borrower in his margin account. When the amount is insufficient, investor will receive a margin call. In the article, it says that due to uncertainties in the global as well as local market arising from the COVID-19 outbreak, selling pressures have impacted the share price, resulting in forced selling pressure to many counters and affecting investors, especially those with margin accounts. Moreover, there are four occurrences why mandatory is no longer needed for PO to request and impose extra margin and haircuts on any collateral and securities after purchase. First, unusual rapid changes in value of the securities. Second, the non-existence of an active market for the securities. Third, no possibility of immediate liquidation for the securities. And the last one is suspension of the securities from trading. In this video, it is important to fully understand the associated risks prior to trading with margin. In conclusion, margin trading allows the investors to buy more stock than they normally would be allowed to if you didn't have a margin account. Moreover, trading in margin financing is privilege given by investment banks. That's all for this video. Thanks for watching.